Let's actually touch base with the management of Coforge. The stock has been reacting to another good quarter. Strong revenue growth has come in, beating estimates. The deal intake is at an all-time high, and the deal pipeline has been looking very strong. TCV numbers looking very good. Sudhir Singh, CEO at Coforge, is with us now for some perspective. Sudhir, great to have you on, and we, of course, remember our last interaction because you always told us that FY25 was an exceptional year and you're poised for good growth. And that's what it is. I mean, 32% constant currency growth in the last year. Now, what about this year? Tell us, and if you could break this down, how much is it organic growth, this 32%? Because you're saying that FY26 you'll build on FY25. So give us some sense of the growth that we can expect, blended as well as the organic.
Well, we don't have a clear guidance for this year, and we don't offer a guidance. But FY25, as you very rightly said, has been an exceptional year. FY26, we believe, is likely to be another exceptional year. We are extremely strongly poised. At this point in time, our 12-month signed order book is 47.7% higher than at the same time a year back. And you might have noticed that through the year, which was FY25, the total order book came in at $3.5 billion US. So at the current point in time, FY25, rightly observed as an exceptional year, sets the way for what sets us up for what we believe is going to be an exceptional FY26 as well.
So should we expect you to reach that $2 billion revenue guidance earlier than what you had earlier said? Earlier it was FY27. Why haven't you just pulled up the timeline because of what you're seeing?
Well, we don't offer revenue guidance, but as we said yesterday in the investor call, we'd be very disappointed if all that we did in FY27 was just hit $2 billion. We believe we have a shot at doing slightly more than that. $2 billion was the guidance earlier. We are not revising the guidance. But we would be disappointed if, given how FY25 has shaped up, how FY26 is poised to perform, if we don't do slightly better or materially better than that $2 billion guidance for FY27.
I think they've not brought the guidance forward because I think it would have been too much for the market to take.
I think it's rephrasing, saying now FY27 will be materially better than $2 billion. So, interesting way of rephrasing it.
It'll be good. Sudhir, hi, good morning, and congratulations. The numbers have come in stronger than what you sort of guided for, and you've been sort of consistently sounding very bullish. So I just want to, I have a quality, the numbers we have, right? And you said on the call as well. Tell us a little bit about what you are doing that others are not being able to do, Sudhir. The secret sauce, if I can put it like that. Is it the segments that you're in which are perhaps doing better as compared to some of the other segments which other companies are catering to? Or is it your sales engine? Just three kind of sharp points, what you think you're doing well.
I think a very fair question. Let me just offer you three sharp points, as you said, in return. Number one, our sales approach tends to differ somewhat in that we focus on large deal-driven growth. What that means is we're looking for wallet share increase. We're not just looking for or waiting for client budgets to go up or go down and to then keep moderating or taking up our guidance. We go for large deals, 14 large deals in FY25, 5 in the last quarter itself is a testament to that. So that's reason number one. Reason number two, and I've said this, and I've had the pleasure of speaking with you repeatedly, is an execution intensity that is uniquely our own. We follow a three-step process, not just in sales, across the organization, which is plan, execute, debrief. Plan, execute, debrief, plan, execute, debrief, with debrief being the most important. We've done that for 8 years. When you build that execution DNA into a team, not just the sales team, the solutioning team, the delivery team, the alliances team, the partnership teams, then it becomes a moat. Then it becomes a growth driver, which is second to none. And finally, reason number three is a very deep, a very industry-led engineering focus. The $1.56 billion deal that we announced with Coforge, with Saber, again was engineering-driven, AI-powered engineering-driven. That's reason number three why we're growing.
Sudhir, on Saber, and obviously that's powering you big time in terms of the deal flow, right? I think it's what, 1.6 billion was the total value of the deal. But there seems to be some concern on the financial health of Saber. They seem to be deeply indebted, I think $5 billion of debt, etc. So could the receivables, not this year, but in the future, could they be at risk at any given point in time?
Well, the Saber deal was very hotly contested. If I were to reflect back in the last four, two of the players that we went up against were the large caps. So it's been a very sweet and obviously a very material deal from our point of view. Saber has, and you would have noticed that just about a week back, divested their hospitality business for $1.1 billion, significantly bringing down their debt outlook. We remain very cognizant of the partnership that we have with Saber, which has been robust. It's of more than 20 years standing. We're very aware of their financial standing at the current point in time. And as we've said, when the deal was also signed, we've got very strong commercial structures in place to make sure that just about any contingency that comes up is something that we address directly, squarely, and very, very early.
All right. Hi, Sudhir. Good to see you. When, we did track what Saber did, with deleveraging their balance sheet, and that would be good for you. Your organic revenue growth for the past year was around 14% approximately. Now you have this big deal of Saber as well. So would it be fair to assume that, the organic growth could be in high teens from around 14%? It's going to be better, so it should be in the vicinity of, say, 15 to around 20%. Should it be around 18 to 19%? I'm looking at a couple of sell-side notes, and they are estimating that. Add to that the inorganic growth, we should be in the vicinity of, as a consolidated entity, to grow by around 23, 24%?
Well, we don't, as I said, we don't offer numbers. I've seen some of the reports that you alluded to. All I can tell you is the confidence, and I suspect you can sense that from my tone and from the investor call yesterday, is sky high. It is not riding off deals that we will sign in the future. So that pipeline is very strong. It's also off the back of the signed order book that we have. So without getting into numbers, we believe organic growth will be very strong. And we will, as always, keep looking for inorganic opportunities if we find something at the right valuation through the coming year.
Okay, all right. Sudhir, let's focus on a couple of aspects. You've said that your margins will improve as well. As you head towards that $2 billion, target, what's your take? Where do margins settle at? I think for this year, you're guiding for around 150 basis points improvement. So once you hit that target, where are you headed in terms of targeted margins? And also tell us a little bit about the wage hikes. Will that be happening in the first quarter? Is it postponed a little bit?
Well, margins, we've been very clear. By the time we hit $2 billion, our reported EBITDA, I'm talking reported, not adjusted EBITDA numbers, reported EBITDA will go up by another 140 bps. We believe we are firmly on track to get to that. As far as wage hikes are concerned, we did our wage hike 3 quarters back. At the end of 4 quarters, which is going to be 1st of July, is when we will step back, look at the market, and take a call on wage hikes going in at that point in time.
Sudhir, just a sort of quick word on this entire AI business as well. Do you believe the common kind of narrative is it will not impact, but you just see the headlines from around the world, right? Salesforce saying that they're not going to hire any coders and programmers for the rest of the year. Microsoft saying 30%, I think it was 40% of the code already being written is being done through AI. For Indian IT services companies, is it a bit of not an existential threat, but what's your sense? How will this play out?
Prashant, if I reflect back on our growth and if I reflect back on why we are growing, one of the biggest reasons that I would attribute to is the way in which our sales engine has pivoted towards, and solutioning engine has pivoted towards AI-led deals. It's been the extent to which not just the delivery team, but the training function at Coforge has been able to, at scale, train folks starting off with foundational AI-based training, and the extent to which our sales pipeline is getting impacted by firms like Salesforce, by firms like ServiceNow, by firms like Microsoft, which are key partnerships for us. So from our vantage, at least from my personal perspective, I can say that AI is an incredibly, and we all know this, powerful general purpose technology. We realize that technology spends are only going up. We also realize that technology spends will pivot. As long as a firm, as long as a team is able to pivot with speed and align with the opportunities that AI is throwing up, good things will happen. Out of the 5 large deals that we closed in the current quarter, 3 would not have happened had the solution not been led with something with a framework that was completely AI underbid-led.
All right.
Sudhir, just one more point, Sudhir. You briefly spoke about some inorganic growth. Is there something that we should be hearing about in the near future?
No, there's nothing that's imminent. As I said, we keep looking at opportunities. If something does come up through the year, we will absolutely bite on it, provided the valuation is right, provided it is a strategic fit. So nothing that's imminent. But as always, we continue to look at opportunities, and our acquisition track record, as you know, has been 100% in terms of making them successful.
All right, Sudhir, we wish you all the best of luck. And of course, that Signity acquisition is sitting with SEBI, I think, and that perhaps will go through as well. Thank you very much. Thank you for joining us, and good luck to you and your team as you continue to execute. Because I think, from what I heard, it's all about execution and the way Coforge is going about it.